the Tampa real estate stats. I kind of speculated on this a little bit with Angela on last week's show, but the statistics for January came out in Tampa, and they tell a telling tale that I've been talking about for a while. We have now our second month in a row of declining home sales, where year over year, so our January home sales this year were lower than last January. Our December home sales this year were lower than last December. We haven't seen a year over year decrease in 6 or 7 years, and we certainly haven't seen 2 months in a row. So people are pointing to this being the sign of stabilization. Our prices are going to start to flatten out a little bit. That's what the stats show as well. Pretty much every year up until this year, our average sale price is rising year over year. It is not rising now. Well, let me put it this way: it's flattening out. And we're going to see that trend. Now, what does that mean? That means we have a really healthy real estate market. It means that the crazy bidding war frenzies and shortage of inventory is going to start to die off a little bit. It means some real estate agents that got in the business that probably shouldn't have are going to get out. We're not going to see these crazy increases in sales. It's just going to stabilize. We're going to have a balanced real estate market. We're still in a seller's market now, 4.7 months of inventory. Again, that's the highest figure that we've seen since January of 17. So it's still a seller's market. We don't have crazy numbers of inventory or anything, but for home sellers, it's important to not overprice your house. You need to price your house aggressively. The idea that values are going to keep rising, and if you make a mistake on price, the appreciation will eventually catch up, it is a myth in a market like this. You've got to price your home right from the get-go, or you're going to chase the market, miss out, and your house isn't going to sell. So pricing it right, aka pricing it aggressively. Every homeowner thinks their house is worth more than it is. That you all do. Yours is the best, yours is the coolest, yours is the nicest. Of course it is, because you live in it. The reality is you have to price it based on what the market shows us, not what you feel or not the emotional attachment you have to think it's worth more than the other houses in the neighborhood, especially in a market like this. The agents that, their whole business premise is geared around getting listings because they tell someone a higher price and work it down, that'll go away. That ain't going to work anymore because prices just aren't going to rise at that same level. So sellers need to price aggressively, need to listen to their agent.
And you might have the best home in your neighborhood. It's very possible. But if there aren't comparable sales to justify a higher value, then it might be tough to get that. Or even if you do, it might not appraise if the person's getting financing and you're back where you likely should have priced it in the first place.
But home buyers, here's the thing. If you're a buyer out there and you jumped out of the market because you were frustrated because you kept missing out on bidding wars and it was a frenzy and it was just too much for you, step back in. Now's the time to get a great deal, to get a great opportunity, as well as to to have maybe a more smooth real estate transaction instead of the chaotic bidding war frenzies that we were seeing. So it's definitely a great time. Interest rates are still historically low. They've come down, in the last few weeks. I've seen that trend. So mortgage applications are up. I think it's building up to be a really good spring. But I would say that the really good spring is going to be comparable in terms of the number of home sales that we might have seen a couple of years ago. The number of home sales that we had last spring, I suspect we're not going to hit some of those figures. But still a really, really healthy real estate market. So anyone out there panicking and freaking out, thinking the market's going to crash, it's not. Real estate is just such a slow-moving thing that it doesn't happen overnight. And again, this could be a couple-month blip on the radar. We might be back up to rising prices and bidding wars in no time. But at least for now, it's starting to show that trend, and the stats support it. Again, so 1,999 sales in January of 19 compared to 2021 last year. 261,057 average sale price compared to 260,652 last year. And again, I already went over the December numbers, but they were a little bit more considerably off in terms of number of sales. So again, some people are saying, the bad January is just a run over from December and some of the shutdown and all those things. So again, I'm a believer in statistics meaning something when they're consistent. You can have an anomaly, you can have a bad month, you can even maybe have a bad couple months. So it'll depend on what we see in February, March as to whether we say we're back to we're stabilizing, or or it was an anomaly.
Right, and that's what I was going to say. I want to kind of see how the stats look through the first quarter because, my January not great, February not great, But my March right now in my pipeline, it's looking like I'm going to do 3 times the business I did those 2 months combined.
That's awesome.
So I'm hoping that means that it's bouncing back.
Yeah, and that's I think what a lot of people are hoping and expecting.
Right.
So, and again, you're listening to the Duncan Duo Real Estate Show. If you're someone that's in Sarasota and Manatee, we have an office there, and I'm going to talk about the stats in that market. They're a little bit different than Tampa, but I'm going to talk about the stats in that market, what's going on in the real estate market in Sarasota and Manatee after a quick break here on the Duncan Duo Show.